Basically, I'm not a fan of IPOs. I used to. But here, this is a good company. Actually, I can see right across. There are two big cranes of 300 and 500 tons from my office in Cochin. It's a great company, even though it's a PSU company. It has been well managed. Kerala used to be known for labor problems, and entrepreneurs and investors were really worried about that in the past. Things are changing in Kerala, and I would say Cochin Shipyard is a well managed company, a wonderful workforce, very resourceful, and they are well located. And even the top management, are given full freedom by the government, and it's like a very efficient private sector company. So I was just looking at from that perspective. So I was not recommending the stock or anything, but I find a lot of value in this stock, and it was a very reasonable kind of a pricing during the IPO, below 6,000 crores post IPO. Post IPO equity. So that's something. There's some money left for the investors on the table. So that is all about Cochin Shipyard. I'm not a number crunching person, as you know, but it seems to be, I think, at this price, with some 15-20% higher than the IPO price, it seems to be fairly valued. For investors, they can look for this company. There's no hurry to buy.
Okay.
Now markets are weak. That's why perhaps you are getting at a sober discounting. This company is sitting on around 2,600 crores cash after IPO. And it was already sitting on some more than 1,500 crores cash.
Okay.
And there is no debt. And this company will be mostly executing defense orders for the next 2-3 years in the visibility, in my knowledge.
Okay.
And we had very small amount of cash, to be very frank, and we are very comfortable. I think investors will be comfortable in this market. See, markets cannot go on going up every day, Anuj. See, so it has got its own automatic, systematic corrections in place on and often. And see, the markets are very efficient today. We should see from that perspective. Earlier, this kind of a correction might have taken a few months, maybe 2-3 months, to have so much correction especially in the mid and small caps. There was significant correction if you see this last 1 week. It was really, surprising to me of the traders especially. So markets are very more efficient and responsive today. What happened in 3 months, 10 years ago, it happens in 3 days in today's kind of system. You see, because so many market participants, especially research analysts, just I'm telling you, if you see from coming to Mumbai, from Borivali to Nariman Point, third person, good-looking third person in a full-sleeve shirt, you'll be either a technical analyst, and it's a good thing. I'm not talking anything bad about them. So there are so many people thinking alike, and they act together. So the sharpness of all or even rise happens. Some of these companies, if you remember, just after the demonetization, I was extremely bullish when the markets crashed that time. I was talking 2-3 quarters, there could be pain for some companies. So investors should look at one particular theme, in my opinion, which are those companies which might have gone through the pain of 2-3 quarters, and from quarter, that means from this current financial year, second and third quarter onwards, are going to turn around. So there is a lot of money in that kind of a theme. The companies affected with the demonetization and related activities in the short term, which means 2-3, maybe 4 quarters. So those companies are beaten down very badly. So, and that is where the big money is. That was a perfect prediction, even though I was not very serious that time. See, I made this prediction, the current fall of 9,700, whatever. I predicted this when Nifty was 9,200 in April. It's just a common sense approach. So these things, luckily go right. I'm not an expert on Nifty, especially. I'm not a big fan of Nifty. But one thing is very clear for investors. It's no time to be bearish on the markets. There will be a lot of reports we'll be seeing about, big doom days coming up. The whole world is peaking out. It's all nonsense, I'm telling you. See, equity and stock picking. India has a long way to go. Nothing has changed. We have been talking about the positives. We have got a stable politics today, a changing economy, a whiter and more organized economy coming up. And we are talking about the domestic fund flow, about the household savings coming into the market. And we are talking about the consumption story. Everything is intact. And a lot of people believe when the markets give a deep correction, all these things disappear. I say, no, it doesn't happen that way. This is a very stable economy today. Be rational. People have to learn to be rational and, avoid the emotions and unnecessary sentiments. And you will be a great investor. The times are very difficult times. So you buy companies. The first criteria is a survivor balance sheet. Write it down. It's the most important factor for the investors if they are hunting values in the infrastructure segment. A survivor balance sheet with the available visibility. Second, the execution capabilities of the people behind their dynamism and their track record and the opportunities in the segment they are operating in. India has got many verticals of infrastructure, including, across the board, railways or shipping, everything, aircrafts, airports. There's a lot of them. 10, maybe 15, 20 subsections of infrastructure, I'm telling you. It's a beautiful segment. Lada, if you remember, we discussed a theme some 1 year ago about the inland waterways and national waterways, wherein I was talking about two stocks. I remember ITD cementation and dredging. Both have done very well. Dredging had in fact doubled. See, one more thing. People should not get carried away when the markets are on an upswing. See, after demonetization from that depressed markets, you see hundreds of stocks have gone up 2 times, 3 times, and 5 times. So some of them have gone, they have gone in much excess of what it deserves. So that has triggered this correction. People can attribute any number of reasons for that, but the real fact is that, overrun and, unexpected kind of moves, much beyond the fundamentals of some of those companies. There could be some manipulation, operators in between, but investors have to understand all these things and go sober. I always talk, be price sensitive. Don't just go out and buy any good stock. Good stock at what price? That's very important. So the being price sensitive, but whatever said and done, these things happens. I'm not very keen on this, the very much fancied finance companies and EFCs or even microfinance companies. I have been recently talking about this. I think this Bajaj Finance and Bajaj Finserv, they are a huge run-up. See, for everything there is a limit, elevation. I think Bajaj Finance and Bajaj Finserv is priced for the next 2 years fundamentals. And, coming back to the microfinancing companies, I have never liked it much other than some trading in between. Because microfinance, when the theme comes, everybody's jumping after that. See, what is microfinance, Lata? You identify the poorest person in this country and give him 25,000 rupees loan and charging the highest rate of interest in the country. I think it's not a good business to invest in.